This is of course a thumbs up. Shareholding, because of the QIP done in this year, shows a dip in terms of the promoter shareholding. So let's go across, look at the next parameter now, and shows you the big dip of almost 20%. It's been very, very volatile yet again as well. But look at the next parameter, that is Street Cred. It has been the other very, very volatile period because the company's earnings have also taken a knock. The last 1 month, the year-to-date returns also, it's steadily been very volatile. 26% downtick in the last 1 year, and very importantly, stocks trading at the same level of roughly around the 100. Investors, the people who invested in the QIP in July of 2025 was at 236 rupees. So you saw 100 rupee downtick for the company even from those levels roughly 9 months ago. And gets very interesting yet again because you have now a listed peer in Physics Wala for the company. Now Physics Wala, a known brand as well, had a decent listing, but since then also the momentum has faded. Not profitable. You look at a clear comparison and a clear win in that terms of Veranda. But we are investors. We look at multiple sectors, multiple opportunities, and hence you have to the likes of the Eternal, likes of Swiggy. You are looking at PB Fintech. So the opportunity, while large, if it's lucrative on relative valuation, becomes the key question, and hence we expect essentially in terms of the outlook for the company. Multiple key aspects to look at. We saw the new learner additions has been quite strong. 1,000 crores in revenues, what they are targeting. 8 lakh plus enrollments by FY30 as well. Enrollment numbers have been quite strong. So this would be a very interesting to watch. And sorry, pardon me again. But the next one also, when you look at lends some more confidence to the company at this point of time, and hence becomes a very interesting aspect for them. But I spoke about the edtech opportunity being very, very friendly. Widening price structure is what everybody fought for, but now over the last 5 years we've seen competition waning away in terms of what has been a very highly competitive space. Formula in that sense, and gone back to look at the established names because of the serviceability track record as well. So when you look at the final ratings for the company, let's pull those up for all. In terms of the income statement, balance sheet and cash flow, we've given the company a neutral rating. Operational highlights have been positive, so we've given this a thumbs up. Shareholding, given the QIP, has depleted. Ownership, Street Cred is a downtake because of the underperformance of the shares, while valuation and outlook are two key aspects, and we will be honest here, given it a little bit of stringency in that sense. But to the company, Suresh Kalpati, the executive director and chairman of Veranda Learning, is now joining in at this point of time. Mr. Kalpati, thanks so much for firstly joining in. A very good a very, very key crucial meeting at this point of time. How are you looking at the company's performance over FY26 leading into that meeting as we look forward to what's the expectation from Veranda?
Right on target. Q4 has been a fairly strong quarter for us, especially going into the last month. We expect to be on target to, 60 to 170 crores of EBITDA. So we are continuing to have strong performance across all our businesses, whether it's K-12, government test prep. It is now combined with this NVA Veranda.
Mr. Kalpati, also the one big crucial aspect has been the demerger of the commerce vertical. Now, a very, very high margin business, and you've given a target of almost 1,000 crores in revenue by FY30. Does that include the commerce vertical, or will that be the non-commerce vertical which will be continuing to house under Veranda Learning?
Why we are considering and we have been pushing forward on the demerger. The first is to create a very focused business which is focused on commerce. No better branding with a pedigree of the newly listed company. We expect that to happen sometime in June. With the projected EBITDA for that business alone at about 180. It's expected to achieve growth of about 30-35%. So it's expected to be a very strong listing. We expect that sometime in June. One of the key reasons that we also from a fact that it is a space in which we have very few competitors, if you will. With even the last exams where we had over with a pedigree of a brand which is over 40 years old, and alumni who are today the who is who in the financial services space, with a high level of profitability space is concerned. There is significant investments that is being planned purely coming from internal accruals to continue to build out. And as I leader in the commerce space. We have always looked at the other spaces where people choose careers, whether it's in terms of the medical profession through need or government test prep for people who those are spaces which in a sense we feel is fairly crowded with very strong players who are already there. In the commerce space, JK Shah Commerce Education would be sort of like an undisputed leader.
Valuation that you're getting for Veranda Learning for both the commerce and the non-commerce vertical doesn't justify the moat of the JK Shah brand which you've acquired roughly in 2022. Do you feel that?
I wouldn't use as strong a word as you mentioned as unjustified. But I think given the growth that we are projecting for commerce at about 30-35%, the current entire market cap of Veranda Learning, including the commerce business, one has to see. But from initial conversations I have had with very seasoned and investing to. But it's, the market has their own ways of behaving. But given just the profitability and the growth, I think it should be a very
and there are almost 50% of your revenue coming from the commerce vertical, and then academic, vocational, all other contribute the rest 50. So almost 200, 220 crores comes from the commerce vertical. That you're expecting to go to 1,000 crores. You also, within the vocational business, has seen strong growth, but the EBITDA profile isn't quite visible there yet. What do you expect the revenue targets for that business, for all those other non-commerce business?
By 27, we expect a non-commerce business, which is essentially our K-12 managed school business and the government test prep business to contribute possibly. Drivers that we are very focused on at this stage is the occasional business that was one of the verticals of Veranda. We have put it together along with SNVA to form by the promoters of SNVA, Vivek and Alok Singh. And one of the things that it does is it's a global university model with multiple universities in multiple geographies with multiple at a significant growth path. Currently, that stock is held as a treasury stock in the non-commerce Veranda business, and that is expected to grow actively being discussed and closed. So we will talk about it over the next 6-8 months when they actually happen. So the non-commerce business as a K-12 and a government test prep, which are
Right. Got it. But Mr. Kalpati, you are giving projections for a business that's growing very well and the expectation of growth is very sharp. But for the other business that's already in the listed entity, the government side, the vocational side, I get about that revenue should double for both of them from the current 100 crores that we are seeing by FY30. Should that be the base minimum expectations that investors can have?
So I think over FY27, 28, sort of to look at an FY30 yardstick, we would at least expect this business to grow by about
in terms of growth projections, because you've done almost 14 acquisitions, JK Shah, of course, being one of the bigger ones. But in the commerce vertical also, you've had other acquisitions in this time. Do you feel that's a strategy that you're opportunity now doesn't allow so much competition, because we've seen a consolidation in this space also, right? And recently that big acquisition in the private space of an academy shows the significance. Current businesses will have to grow and show those projections.
I think the acquisitions that have been done predominantly has been to create these 4 verticals, which we have done. At any more acquisitions, we got everything that we need to organically grow. We have created enough moat in terms of competing advantages in all of these verticals. So are we looking at taking on any further debt for scaling our business given our strong internal cash flows? So the first 3 years of Veranda was acquiring, consolidating, and now the next couple of years will be to unlock value for all the shareholders who've been with us for the last 3 years.
A lot of investors who got into the QIP as well at a much higher price. So you are giving that confirmation of debt being manageable and equity raise also being limited to what has been. So got that. And 26 year to date. What has led to that growth, and is that largely been through the commerce vertical? Would that be a statement that would be right to make?
Of students and in terms of revenue and EBITDA. Having said that, very recently we put out that our government test prep business, which is it was about 50 crores. Very recently, a couple of days ago, we crossed a revenue of 100 crores. So even the non-commerce businesses are now on a strong ensuring they are regulatorily compliant because they have been unlisted before they came into our fold, and then setting up an integration pathway. Having all of that completed in the last one and efficiencies already now in place is driving the growth going forward.
Well, Mr. Kalpati, thanks so much for firstly joining in, because I know Q3 was a tough one for you. You are giving in base with you yet again for the second listing to happen, which is the more lucrative business as you've highlighted. But thanks so much for joining and giving us time here at NDTV Profit.
Thank you so much.
Well, that was Veranda Learning, a very, very interesting opportunity right now for a space that's been hot in terms of soon in FY27 will be something to watch out for. But that's all the time we have on KYC. Thanks so much for watching. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
बिटिया की शादी है हमारी।
बधाई हो बधाई हो।
कुछ पैसे मिल जाते समय पे लौटा दूंगा।
गोल्ड लोन देके अपना फर्ज निभाते हैं। केपरी लोन्स फर्ज निभाते हैं।
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology, which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job. Got a couple of
US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले. Actually, raising fund was also difficult for first few rounds.
Really, you got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav had met 100 investors and still not got one.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or so this is a wedding dress which was not delivered.
Tulips and lotus bloom. Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this moves towards net zero. Every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India.
Of Kutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition. From surgical iron play
of US-Iran peace deal continues to loom over the Indian markets. Nifty slumps over 1.5%, while Sensex slips over 1,200 points, all sectors in the red, barring Nifty IT and Pharma. PSU banks and media cracked the most, down over 3%. The rupee continues to fall, slips past a fresh psychological mark, hitting 94 against the US dollar for the first time. The move underscores sustained pressure from global dollar strength and risk-off sentiment, keeping currency markets on edge. The government has revised its fuel duty structure, cutting the special additional excise duty on petrol to rupee 3 per litre and scrapping it entirely on diesel as Middle East war concerns continue to rock oil prices. Tata Motors passenger vehicles under pressure today after Jaguar and Land Rover temporarily shuts the production at its Solihull plant in the UK. The shutdown is due to a part supply issue impacting production of key models at the facility. While the halt is expected to be temporary, the development has raised concerns around near-term production, visibility and earnings impact. Brigade Enterprises, that jumps nearly 10% today after the company announces 2 new residential projects in Bengaluru, amounting to over 1,800 crore rupees in potential revenue. The surge stands out amid a broader market decline, highlighting investor optimism around the company's strong execution and entry into high-potential premium housing corridors. Hello and welcome. You tuned into Markets at 12. I'm Nisha Podar and let's take it straight to the markets. And yes, all's not good, or should I say oil's not good? Because for the Indian markets, it's the crude which is really playing truant as the single biggest impact really coming in when it comes to the crude oil prices. And because of the flip-flop in terms of the US-Iran negotiations and de-escalation of the Middle East war, crude prices remain elevated, and therefore the Indian market is also seeing that kind of a pressure really building because of the crude oil prices. Also remember, rupee is hitting a newer low for the past many days. In fact, a little bit of recovery in the last trading session has also been taken in, and 94 past has been the kind of rate that rupee has got against the dollar. So it's coming in as a worry. All sectoral indices are in the red at the moment, barring a few with minor gains. Let's focus on one particular counter because of the news developments we are tracking here. Biocon, which has announced a top management reshuffle with changes at both the CEO and CFO levels. Siddharth Mittal has resigned as the CEO and MD and will move on to a new role within the group. Varsha is here with all the details of the top brass changes at Biocon. Varsha, tell us.
Well, yes. So if you see Siddharth Mittal, who is the CEO and managing director at Biocon, has resigned, but he'll be with the Biocon and will, have some other leadership role which is undefined as of now. And also one important thing is Shrihas Pradeep Tambe, who is has been appointed as the additional director of the company, and currently, if you see, he is the chief executive officer and managing director of the subsidiary company, that is Biocon Biologics, and he has been appointed, or rather for 5 years, effective from 1st April 2026, subject to the approved of the shareholders of the company. So this is in all a positive news, considering that Shrihas Tambe is the backbone when it comes to Biocon Biologics, and will also shape the future of Biocon overall, considering the company going into biosimilars, which is the next leg of growth for the company. So overall, if you see, Biocon will be defined as a biosimilar company, and Shrihas Tambe is the main guy behind that.
All right, Varsha, thank you so much for getting us those important details coming in on the top management changes at Biocon, and that particular stock is down close to 2% in trade. Let's take it straight across to the market, and how should one trade in a highly volatile and today a weak market. Nishal Maheshwari, market expert, joins in now. Nishal, it's one day up, one day down. It's volatility, I would say, instead of relief that came in for 2 days in the middle.
Yes, I think it's a global situation basically, which is also up and down every day, and that's why I think it's getting reflected in the market.
That's right, Nishal. Yes, but how does one really now understand the crude play? The way the de-escalation efforts are going on, and it looks like a one-sided affair from the US, because Iran has rejected their last proposal. So how should one really take cognizance of the kind of uncertainty that's there in the market, and what happens to the ones who bought in hordes, considering there was a relief in the last trading session and now the markets are down again?
So I think it's a volatile market. If you are a long-term investor, then maybe the valuations are interesting at these levels. And every down price from here, basically one can keep on accumulating in smaller batches. But if you are a trader, I think this is the best market to be avoided. There is no point on doing unless you are a short-term, you are on the short side. Then one can continue to keep on shorting this market because there is too much uncertainty. But I think the best thing is to avoid the market for the moment.
All right, so you're saying avoid the market for the moment, but what all factors are getting baked in or already baked in into this market, Nishal? And are we prepared for a much worse condition? And second, also how now RBI will take this particular situation where inflation is going up really on the ground level because of the various energy supplies being constrained.
So I think as far as inflation is concerned, I see the number maybe going up to 4.5%. I think which is okay basically given the current situation. I'm talking about at the current market prices of oil, unless it takes off big time. Then we have to take a relook at it. At the moment, I don't believe that RBI is going to be looking at any rate hikes for the moment, given the inflation is sort of okay basically on a long-term trajectory of 4%. I think that's where I think maybe it will go up 4.5% is what most of the economists are projecting. So that is as far as inflation is concerned.
Right. So, Nishal, there is one more aspect, which is that a lot of global brokerages have really downgraded India's expectation and potential for growth, backed by the kind of uncertainty that's taking place, and also that India is the worst affected market when it comes to the oil supplies, when it comes to the Strait of Hormuz being constrained. Now, how does one read into it, and how worried should the investors be of this kind of downgrades really coming in and lowering the earnings potential as well as the overall outlook?
So I think market is always ahead, and market has gone ahead and already discounted quite a bit of that, basically that the GDP is going to get downgraded. I think the worst I saw was from Goldman Sachs, which came with around 5.9% downgrading from 7.5. So already I think 150, 160 basis points they have shaved off. That is the worst kind of a situation, worst case. But I think 60 to 80 basis point is most of the other economists are putting out. So maybe from a 7.5, you may go down to 6.7, 6.8. But that's also a pretty decent number, basically, given this kind of volatility in the world. Now, in this background, we have to see that market is already down or almost 10% from the top. So I think quite a bit of it is baked in. At the moment, I see that the market is now talking about maybe 5-6% kind of earnings growth down from 15-16. That is what the market is baking in for FY27. And I think that's a fair number, basically. That's why I was saying if you are a long-term investor, it could be a good time to actually start accumulating from the market.
Yes, but Nishal, also the question is for how long and how much cash should you put in right now? What if this particular situation really persists for longer than we really expected? So that is one question. And how much more downside on Nifty 50 are you penciling in, considering that the de-escalation doesn't happen in the given 10 days?
So nobody knows whether it's going to happen in the 10 days, 20 days. So it's a difficult call one has to make, basically. So if you are a long-term investor, you are saying invest for next 6 months, 1 year. And I'm very sure, basically, this cannot last for that long. So that is a time frame, basically, which I'm talking about. Basically, if you are an investor for more than 6 months, a year, that's a long-term investing, and that's where you should be. And from here onwards, maybe there is another 5% downside in the market, maybe 7%. But I think 20,000 Nifty is a very, very strong, any way we calculate it. I think it's after even taking consideration saying that India is going to get even diluted as far as PE is concerned. In that scenario also, I don't think so Nifty should go below that. So I'm saying we are only around maybe 5-7% away from there. So every fall of maybe 200, 300 points, one can keep on accumulating. So maybe one can form batches of 15% each. If one has to spend 100 rupees, every 15 rupees one can do with the 250, 300 point fall from here.
All right. That's a good suggestion, Nishal. So thanks so much for joining us with your insights on the market, and also a strategic suggestion for the investors to really put in money in a very uncertain time. All right, let's focus on one IT bellwether. We are talking about Infosys, which has announced 2 acquisitions worth about $500 million. And those 2 are Optimum Healthcare for $465 million or over 4,300 odd crore rupees, and Stratus Global for about 890 odd crore rupees. But the stock is slightly depressed, but it's an otherwise very weak market as well. Amit Khanna, who's a partner of digital and AI at Grant Thornton Bharat, joins in now to discuss what it really brings to the table for Infosys. Amit, with these 2 acquisitions, you have a good view on what these companies really bring to the table. How do you see this acquisition and the benefits for Infosys?
Yeah, thank you, and good afternoon, everyone. I think these acquisitions are going to give Infosys a positioning from a mid-tier IT services company to end-to-end digital transformation player, particularly in the healthcare area. The market is moving for more verticalized sector-specific solutions. Optimum is very, very strong in that space. It is very strong in the provider area, which is where the gap exists for Infosys. And this will give a lot of solutions in the portfolio of Infosys, where Infosys can do end-to-end from a mid-tier to a large value-accredited solutions, particularly in US market, which is perhaps the largest for healthcare.
Right.
From the insurance one, I think the same analogy, though I will say the Optimum is more strategic acquisition in my mind compared to Stratus.
That's right. And it's also quite a large amount as well. $465 million that have been spent. So Amit, what does the Optimum Healthcare IT really bring to the table? And when we talk about the AI thrust amongst the big tech companies, how does Infosys now position with these acquisitions?
Yeah, so let's talk about Optimum for a second. So Optimum is very, very strong player when it comes to provider market in the healthcare space. It's been doing the digital transformation in that space very well. Ideally speaking, the healthcare is one of the sector which is very specialized in the nature. So if you see the large player, they have very strong vertical presence in the sector, not the horizontal presence. So look at Accenture Health or a Cognizant, who are big in the healthcare space. They are very, very verticalized when it comes to the healthcare. Also, the client tend to layer of IT services. So in that sense, this will give a very good strength to Infosys to actually pitch for those kind of a player. And it will be an emerging consulting digital against their players. I think one, they can pitch for the larger margin game. They can play the whole AI game very well because the Optimum positioning is AI-driven digital transformation rather than the classical way of in the digital transformation. So that will also help Infosys to up the game in that market.
Right. So, Amit, when we talk about the similar capabilities being there for other competing companies in the IT sector in India, table.
It's difficult to put in exactly the ranking here, but I will say that Accenture, Cognizant, they are way ahead if I look at the larger player. But also there are large specialized players in this market who are doing very, very well, including players like the Optums, the Philips Healthcare, the specialized players like IQVIAs of the world and all. They're all doing fairly well. Now, Infosys, I don't think anything will change overnight, but now it has large onshore capability to support does not have a very large delivery setup in India. So Infosys also has a way to leverage the complementing skill because Infosys is strong in doing large scale. Now it's got a very large front-ending team there, which is a consulting team, and also a very large tech capability sitting in India. So together they can make a lot out of it, and the time will tell what they make out of it.
That's right. But Amit, a lot of action is really taking place in the AI capabilities of the Indian IT companies, or at least the top 5 ones, and the mid-caps like Coforge are also taking a stride. What are the trends really picking up when it comes to what is being seen in the market where there is a divided house in terms of those who really believe in the IT companies and the ones who think that it perish?
Still do a lot of commoditized work. Now that part of the work will be taken over by AI very soon. It does not mean the number of people required to work will reduce drastically, but the nature of work will change drastically. So they generally need to move closer to the client, closer to the solution, and application of AI to bring in the value to the client. I think, and all of them, all the top 5 players and some of the small players are trying to move to that direction as much as they can over the last few years. I think the trend will continue. To do this successfully will actually succeed. I genuinely feel that India will give few more large IT players over the next few years purely because of this displacement and opportunity.
Become bigger as well, besides the pivot of the already existing IT companies. Thank you so much for joining us with your insights on the AI thrust of the IT companies, and especially what joining us.
Thank you.
All right, next we will chat about something which has really been the hot topic of discussion, especially with the IPL's season really starting in April, and ahead of that, two big bang acquisitions, two teams getting sold at over $1.5 billion. We are talking about RR and RCB. There have been a lot of talk about the steep valuations and also the earning potential of the IPL teams, and also how does IPL really now look as an asset class. These questions and analysis to Jayavardhan, who is the co-founder and CEO of N-Tracker. He's joining us right now live. Jay, always a pleasure speaking to you on. For majority of the IPL teams on a YOY basis when we compare 2024 and 2025. Your analysis on that, and what are the factors really driving
and profit both have declined for most of the IPL teams in the last fiscal year, that is FY25, and the major reason is a decline in central broadcasting right. And rest of the income comes from sponsorship, merchandise, and ticketing business. So clearly stress at the profit. Second, what's driving the valuation of the two IPL teams which got sold out recently, RCB and Rajasthan Royal. So the first reason is rare opportunity to buy a team, and the brand value attached to IPL. I think that's the reason for driving the valuation. It's intangible, but I think. To the room where you can sit with the businessman and tycoons and conglomerates. So I think the excess is the major reason behind driving the valuation.
So kind of valuations that have been really commanded by the two two teams, RR as well as RCB, are in line with the consumption companies' deal valuations. They are akin to that. So, and also Aryaman has made a statement, Aryaman Birla has made a statement recently saying that IPL is quasi-consumption. How do you assess this particular aspect?
So, of course, apart from the brand value and brand affiliation, there is a, future opportunities in sponsorships and merchandise business. So if you look at RCB balance sheet, apart from central broadcasting, IPL valuation are rising because of three things, guaranteed central revenues, scarcity of teams, and massive brand monetization potential. But 25x revenue multiple, this is clearly a long-term strategic bet. And it looks irrational to us, but I think in a long term, we have seen Vijay Mallya, tweeting and tweeting around and saying that 500 crore investment translated into 16,000 or 18,000 crore business. So
for this to rise multifold, and what are the monetization aspects very quickly, Jayavardhan?
So, you look at the expansion. Apart from the men's IPL team, women IPL team is also coming. So that is the, major driver. Apart from that, all these teams are also playing different riders. They play around 4 leagues globally, apart from IPL. So there is a clear headwinds there. And, the sponsorship deals are also going to be, fat and big in the coming time, although the central broadcasting, income will come down.
Right. Jayavardhan, it's always a pleasure to And these valuations have been steep, but it's also the scarcity premium that is really driving it, and it's become a quasi-consumption play with a huge brand being created as that. All right, let's take a quick look at the market at this particular point, and no let up in sight for Nifty 50. In fact, it has dropped slightly further, 1.6% down on. With that, it's a wrap on Markets at 12, but keep it with NDTV Profit.
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs.
IIT Kharagpur, bright future, can get a good job, got a couple of
US companies were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But one term sheet.
What happens with a business when it has also a significant retail customer?
Emails would just say that you have ruined my life. I want to shift in house. I couldn't shift it because of you. This is a wedding dress which was not delivered.
The places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The lifetime
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us. A sustainability mission, an initiative by NDTV.
The fairways of Kutub Golf Course set the stage as the NDTV DP World greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for NDTV DP World PGTI Golf Pro app, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mind.
A tsunami.
Presenting the all-knowing, all-powerful Tech Guru. Whoa. Of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use. That you can actually use.
Tech has changed. So should your tech show. New year. New power panel. India. The trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumb.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Datia, and today we have Alex Matthews standing at the NDTV Profit market. Up in terms of all the action.
Well, Hira, it's an absolute pleasure joining you on this show, and it's a happening show. I've been looking from the sidelines, and today I get to participate. But it's not a pretty picture. That are playing out. It's a global risk off sentiment towards the end of the trading week, and you saw that in the overnight handover from the US. This is something that is playing out in India and manner. So global risk off sentiment currently playing. You have the Nifty 50 that trades near the low point of the day, close to 400 points in fact at this juncture, 359, 360 or thereabouts, but it has as much as 8% to about 26.5, 26.6. So it's as high as it has been in the recent past. You have a situation where the broader markets are underperforming or actually breath is not very pretty at this moment. And you're also seeing uncertainty that persists globally because you have a 15-point message that was sent out by the US to Iran. And there is no seemingly end to the conflict at this point. And so that uncertainty is playing out in energy prices, crude prices, as well as in the risk. The India rupee has crashed quite significantly. It hit a low of 94.65 earlier on in the session. It still hovers very close to that 94.6 mark. And so it's important to see which has to do with the excise duty cut on both petrol and diesel. At least to a certain extent, that's relief to the consumer as well as to the OMCs.
Yeah, I mean, but not for the 1 p.m. special today as well. But let's quickly look at the watch list. ONGC, the gains in terms of crude prices are auguring well for the company, and that stock is trading in the positive. OMCs, however, are continuing to Infosys has acquired 2 US companies, and that's the reason why we're talking about it, along with Tata Motors PV, where JLR has halted production once again in the UK. HDFC Bank has snapped the 2-day by HSBC. HET Graphite India, both of these counters are buzzing in trade because the graphite electrode prices are expected to rise. And you have Acme Solar, which has gone ahead and commissioned an additional capacity.
Enterprises in focus and up in trade. And you have our OFSs, that's Oracle Financial, on the back of a mega deal, seeing some good boost. Lloyd's Engineering was gaining in trade, and today it snapped the two-day gaining streak. Rated their midterm growth targets. So all of this and more on trending stocks today. But let me go back to Alex to take the rapid fire with Akshay Bhagwat of JM Financial.
Absolutely, Hiral. Well, let's keep it rapid fire. And let me first ask you about HDFC Bank. We've seen it plumb lower lows practically every other day. What's the trend on this one?
No, Alex, the trend is negative for HDFC Bank. 780 is the resistance, and possibly 720 is where the short-term downside is possibly opening up for HDFC Bank.
Okay, what about HEG and Graphite? Because these are reacting to news-based.
600 can be the possible target for HEG, and for Graphite India, the upside can be till 690 to 700.
Another stock in the news, Acme Solar. You heard about the commissioning.
It can be the possible upside.
Brigade Enterprise from the real estate pack did particularly well in the early part of the session, but cooled off a tad bit. Can it still be bought for the potential upside from this point? Financial Services was one of the top gainers, but then again it's cooled off from the high point of the day. Would you buy at this point?
Avoid strong resistance at 7,000. Better to avoid. Give it a miss.
Give it a miss. So most of the stocks here are a miss because you're not certain about the volatility for the market as a whole, and certainly not for these individual names.
Absolutely. Let's in fact some of the stocks which are trending on Google are very interesting to see. From a Bajaj Housing to a BEL, ITC, RVNL and Tata Steel are the ones that, you know, are trending on Google. Let's pick up a Bajaj.
Still it's negative. It's an avoid. Possibly 70 is the downside I foresee in Bajaj Housing for short term.
Okay, what about BEL, ITC, RVNL or Tata Steel? Anything that you like from these names?
Capped 290 to 85 is a strong support, and if market supports a rebound, can see 315 to 320 in the making. Tata Steel is another buy candidate from a short-term trading perspective.
Right. All right. So interesting names. But one of the stocks that stands out after an analyst meet that was done a short while back is Sagility. That there is potential for strong EPS growth, close to 20% actually I read in some brokerage notes. But let's find out what exactly the takeaways are from the various brokerage notes that have come through. And the week actually, because of the way that it moved on Wednesday, why is it still in focus today?
Well, Alex, thank you for that. If you look at Sagility as a company, it was in focus after Nomura's note where it saw a spark of 7 guidance for low double-digit to mid-teens going ahead. Further, they also see the overall shift coming in from the employee-based model and moving into project-based model, where they say that employee-based earning will be lesser and company will move into the project-based model where they'll start earning based on the projects they do than the fixed-price projects. Secondly, they also restates that going ahead, the AI will play a very structural role for the management, and they also want to increase their stakes when it comes to provider segment. And given that the overall US pressure which they're facing in the insurance company, that would act as a tailwind for the company going ahead, and that would help the company grow further, and that's the reason the stock is buzzing into it and remains the focus.
Yeah, absolutely. So Chokalingam joining us right now. Mr. Chokalingam, as always, a pleasure speaking with you. Let me start with a question on Sagility and whether or not you think that there is significant potential upside. There are brokerages that have
looks good. I analyzed it. Whether you take a year-on-year basis for quarterly result or annual result, the growth seems to be quite impressive. Stock also corrected.
So that's the view on Sagility. Let's talk about the graphite electrode pair, which is HEG and graphite. Now, remember, in of steel, they're used specifically in electric arc furnaces, but they're also quite a bit dependent on what plays out around the globe, particularly in China and in the US. So let's go sharply today. Parth.
Thanks a lot, Alex. So, with the weaker markets today, we have two companies standing out, which he rightly mentioned are HEG and Graphite. And the reason why these two are up today by around 600 to 1200 per metric ton, and this translates to a rise of around 15 to 30% from the recent levels. So now this gives our domestic players a good enough EBITDA as well. So that is something that we need to track moving forward. And the reason why the industry leader has increased their prices is because the raw material and the soaring crude prices.
Yeah, absolutely. So quite a few supply chains around the world are getting impacted. You heard just a short while back how the lack of helium supply is affecting chip on graphite electrodes in HEG and graphite. Mr. Chukalingam, I don't know what you think about the fundamentals, because they're yet to actually announce that they too have taken price increase.
Not chase after this rise, because user industry is steel industry, and because of this war, already this morning, if you see, the global institutions have revised downward unless it corrects 5-10%, I would not buy them at these levels.
So that's with regards to where graphite companies go. But moving on. Is given out. Now, to be noted that this is not something that will be passed on to the consumers. This does come in as a benefit to your OMCs because of the rising prices. The other way to look at consumers facing a price hike, here they will be at a status quo, but this does become an issue when it comes to the government's revenue stream. But let's listen in to what Finance Minister Nirmala Sitharaman
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें, और जिससे वो ज्यादा दाम में खरीदने वाली चीजों को सरकार उनको मदद करेगी, मगर जनता के ऊपर दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय से आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
to prevent the rise in inflation, and that's a very important talking point heading into the end of trade today as well. But one of the stocks that is bearing the brunt of selling, and this is again Tata has announced that one of their key plants, that is a plant in Solihull, is going to be shut for a period of at least 2 weeks. Let's find out from Puneet why this is significant. Puneet, for Tata Motors,
downward spiral essentially, which started in last April of 2025 with the tariffs for Donald Trump, and then post that you've seen the cyber attack come on in the month of September, so you've already seen production losses and next year as well, because you are seeing consistent pressure on production, as you rightly mentioned, in the plant in UK. Period of this is a pre-scheduled shutdown also for Easter holiday, so there's some bit of out this information first, but the important part is that it's been one of the years where Tata Motors might find it difficult to even cross 3 lakh mark for JLR, which generally operates at 4 lakh in terms of sales performance per year. But now the CEO of the company, there seems to be a big challenge for the company going ahead.
okay. Well, so that's the picture on Tata Motors. Mr. Chokalingam, specific question on Tata Motors PV. In India, would you also have a similar opinion, and would you stay away from Tata Motors PV, or does it become attractive when it has fallen as much, and does this actually
on this same channel, I've been consistently saying for the last 4 to 6 months that Tata Motor commercial vehicle business is far superior for 2 reasons. Tata Motor and its investee company also play on the global theme, whereas Tata Motor CV, the commercial vehicle is a play on domestic demand, and its investee company Tata Capital CV to Tata passenger vehicle.
With regards to where Tata Motors PV and CV goes, and Mr. Chokalingam gives his pick out of the two. Another stock that's buzzing in flat. Jasmeet is with us to tell us more as to what these acquisitions could mean for an Infosys and what brokerages make out of it as well. Jasmeet, over to you.
Well, Hiral, thank you for that. Infosys is on a spree to healthcare, especially Optimum Healthcare, acquired for nearly 4,300 odd crores with a valuation of 1.7 times the price to sales, which seems reasonable. The second one is Stratus, which is in the insurance segment space, where this particular acquisition company extends their strong holding in the US in healthcare and insurance space, which they see growing, and they also wish to leverage the overall AI platform, that's Topaz, to increase their client traction going ahead. Going ahead. Well, we also have brokerage notes which have come up and given their opinions and what they feel of how much of growth will this acquisition add to the company going ahead. We have Morgan Stanley on the overall counter, which says they maintain equivalent target revenue going ahead. Further, we also have something like a Citi, which says that they maintain neutral stance with the target price of 13.95, and they note that they see overall 1.6% of increase in Infosys revenue going ahead in FY20. This acquired entities to the Infosys going ahead. Secondly, they also make a note that the overall deal closure timeline is a very crucial thing to watch out for. While thirdly, they also state that with this, we can expect a lot of other IT companies to move ahead with merger and acquisition.
Thank you so much for that. In fact, Mr. Chokalingam, a quick view when it comes to Infosys.
Certainly, it's a buy. I strongly believe 10 to 15% return possible for 4 reasons. Its operations and also the rupee depreciation, which would be favorable to a company like Infosys.
That's with regards to where Infosys go. Moving on, a recent listing, which is Tenneco, that had a conversation with Arvind Chandra, the whole-time director and CEO.
Every time there's technology, complexity and disruption involved, Tenneco actually leads the way. Call it a marriage. A good marriage of high technology and affordability. In India, everything has to be affordable to the end consumer. And the challenge given to us by Mahindra, we accepted that. Most of the solutions that you have in the field are the conventional one tune kind of ride, which means you are never comfortable in any road. Yeah. Not in a regular road or an uneven. Gives us the ability to take it to the next level, where we have these hydraulic valves that interact with a shim stack, and depending on the mechanical ingenuity, and we do that without using electronics, without using software, without using sensors, without using motors. So that's a brilliant idea that has now come into the market. Finds a much broader use across other OEMs, across the entire passenger vehicle space. We think it's going to become a big disruptor in the Indian market.
Well, that's a very big point that you make, that it comes without the electronics part. Of course, a lot of processes that you are seeing around is regarding that product. So you are seeing that continuous demand being there as well. And as you rightly said, listed in November, had a bumper listing, manufacture the exhaust and then the suspensions which come in the ART system, as you mentioned.
Yeah.
In terms of your capacity, you are operating at a very high utilization. A lot more capex for both these are on the anvil now?
Absolutely. So right now we are in the Hosur plant near Bangalore. So this plant makes 7 million shocks a year. And we're running official announcements yet, but it's just a matter of time that that happens, because our order book, we said that in our Q3 as well, that our order book has been very strong. The 2028 revenues are already 100% booked. Announced a new plant for the clean air business, which is the exhaust systems in Kharkhoda in Haryana. But it's just a matter of time that we will be adding more capacity here as well, because the order book has been very solid. To 60% ROCE, that's what we reported at the end of FY25, because we got a very unique, standardized and modular approach to manufacturing, and you might have seen that over here, where but we run that at very high capacity utilization, and because of that, we have this unique strategy that allows us to have high capital efficiency, and that's why the ROCE is so high. And of course, as we move up the technology evolution curve, our margins will also improve.
So that's the management of Tenneco. In fact, very quickly, any view, Mr. Chokalingam, when it comes to Tenneco?
Hold in case it declines hard. Business looks too good. Return ratios are very good. I'm giving only hold because 25 revenue growth was not missing, but because of the margin improvement, it has done well. So therefore, I'm giving hold. But on decline, one can consider buying it.
So that's with regards to where Tenneco goes. But thank you so much, Mr. Chokalingam, for joining in. Always a pleasure to speak to you as well. But completely out of time, it's a wrap on this edition of Trending Stocks.
That भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family, it was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift in house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros joined the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table
Hello and welcome. You're watching NDTV Profit with me, Hira Dahadia, and my colleague Samit Sarkar. And this is a special conversation when it comes to the excise duty cut, the implications when it comes to OMCs, the implications when it comes to the government, the exchequer. And that's the big question from here on. Now, fuel prices are firmly back at the center of the policy debate, and in a decisive move, the government has cut the excise duty on petrol to ₹3 per litre and reduced diesel excise duty to nil, which is zero. While the stated objective is to temper inflation, the real question is transmission. Will the transmission translate into lower pump prices? No, the answer is no to this one. Or simply it is the ease of the balance sheet stress of oil marketing companies. That's what we're talking about, Samit, right?
Exactly. So there are two things that have happened. Firstly, they have reduced the excise duty that they used to charge, the government used to charge on petrol and diesel. And the second thing is they have made it sure that this will not be passed on to the consumers. So it's clearly a beneficial point coming in for the oil marketing companies who have been currently suffering a huge loss that we are seeing. And the Finance Minister Nirmala Sitharaman also said that the move aims to ensure uninterrupted fuel supply and protect consumers from global price shocks. Listening to what the Finance Minister had to add on this excise duty cut.
विदेश में मार्केट में दाम बढ़ रही है क्रूड का, उसके कारण पेट्रोल और डीजल का, एटीएफ का। माननीय प्रधानमंत्री जी ने ये चाहा कि कंज्यूमर का प्राइस बढ़ना नहीं है। उसके कारण हम निर्णय लिए हैं कि ऑयल मार्केटिंग कंपनीज को सपोर्ट दें और जिससे वो ज़्यादा दाम में खरीदने वाली चीज़ों को सरकार उनको मदद करेगी, मगर जनता के ऊपर रेट बढ़ाना नहीं होना चाहिए। दूसरा, बड़ा दाम विदेश में बढ़ रही है, उसके कारण ऑयल मार्केटिंग कंपनीज खरीदना रोकें। ये से हालत ना हो, वो फिर भी खरीदें, फिर भी ले आएं और हमारी जनता को समय समय पर सही क्वांटिटी जितना भी मिलना चाहिए उतना मिलने का इंतज़ाम करें। इसीलिए आज इस निर्णय के कारण सप्लाई कमी नहीं होगा, सप्लाई में, अवेलेबिलिटी में कमी ना होगा, जनता को डीजल भी, पेट्रोल भी, क्रूड भी मिलेगा।
So let's get into the details of this. Firstly, the government has cut excise duty on petrol to ₹3 per litre from ₹13 per litre. Now, do remember that there are 4 components when it comes to excise duty. There is basic excise duty, special additional excise duty, agriculture, infrastructure and development cess, and then there is additional excise duty. Now, out of these 4 components, the component that has been cut is special additional excise duty. Here, petrol has come down to ₹3 from ₹13, and diesel has come down to 0 from ₹10 earlier. So a ₹10 reduction on both the retail fuels, that is petrol and diesel. And this brings down the total excise duty which the government charges on petrol from ₹21.9 per litre to ₹11.9 per litre, and on diesel from ₹17.8 per litre to ₹7.8 per litre. Now, as per Nomura, the blended marketing margin. So what does this do for the oil marketing companies? This lowers the marketing margin losses that the oil marketing companies have so far been incurring on sale of every litre of petrol and diesel. Now, as per Nomura, the blended marketing loss that oil marketing companies are were incurring was close to ₹48.8 on sale of every litre of petrol and diesel. And this now comes down to ₹38.8 given the fact that excise duty has been cut by a similar amount, and this will not be passed on to consumers. Oil marketing companies will be keeping it to themselves to protect their balance sheet. Now, this will reduce the losses for the oil marketing companies, and change of every ₹1 per litre on the margins increases the EPS of IOCL, BPCL and HPCL by anywhere between 14 to 24%. But do remember that even after this reduction in excise duty which benefits the oil marketing companies, all the 3 of them are still selling petrol and diesel at a loss. Now, what will be the impact of this on the government? Now, India consumes close to 170 billion litre of petrol and diesel on an annual basis. Now, this is as per analyst estimates, and this cut will translate into an annual loss for the government of close to 1.7 lakh crore rupees. Now, which is nearly 5% of the central government's gross revenue. So, a big hit coming in for the government if on an annual basis, if this excise duty cut continues to prevail throughout FY27, so that is one thing that we need to watch out for. And to discuss the same, let's get in Gaurav Gupta, Chief Economist of IDFC First Bank. So a loss of close to 1.7 lakh crore is what is expected. A loss of close to 1.7 lakh crore rupees is expected for the government. So ma'am, how do you expect the government to make up for the shortfall firstly?
So the net actual impact will be lower. It's around 950 billion rupees, which is around 0.2% of GDP. And that's because they have also increased the windfall tax on export of diesel as well as ATF. So on one hand, there will be extra revenue generation on the export of these two petroleum products, which will balance out the loss of revenue from the excise duty cut on petrol and diesel. So net for the government on a 12-month basis, the revenue loss will be actually lower, somewhere around 950 billion rupees. Our expectation is that given the extent, it's a much bigger cut. We were expecting a lesser cut than this, but it's a bigger, significant cut. It also shows that in the Government of India assessment, how serious this sort of West Asia crisis is and how they are looking at it. We assume that, it's not necessary that the excise duty cut will be there for the full 12-month period. It can also happen that if, let's say, the West Asia crisis de-escalates and the second half of the year, there's a sharp drop in crude oil prices, then it's more or let's say a half year impact. Then instead of a 950 billion rupee revenue loss for the center, it can actually come down to around 440 billion rupees. If let's say you just take 6 months of these excise duty cuts on petrol and diesel.
Okay, but just wanted to check with you on this. Obviously, yes, the government has increased export tax on diesel and ATF, but what channel checks are now indicating is the fact that refiners have anyways stopped exporting most of the petroleum products. They are trying to store the same into the domestic market, given the fact that there is still uncertainty on crude availability that could happen going forward. So the impact, don't you think, could be on the higher side?
So if that's the case, then definitely the impact becomes the higher side. In our case, what we have done, we have taken, assuming for the 950 billion, if you take that estimate, that assumes that the quantity of diesel and ATF exports are at par with what we saw last year. And last year also was quite a weak year for both diesel exports as well as ATF because of the Russia-Ukraine and plus the sanctions on the Russian crude. So anyone using Russian crude to create refined products was also getting targeted. For example, we actually saw a sharp drop in Indian exports in FY26 of diesel as well as ATF. ATF, I think, was down by 21% in the year, and diesel also saw a significant decline. So taking the export pattern of FY26, that's how we're getting the net of impact. But yes, suppose if there is a standstill in our exports, which is still not the case, officially the government of India India remains one of the few countries which is not curtailing its exports of refined petroleum products. But if there is a slowdown and it stays for a large period of FY27, then the net cost impact will definitely go up. It can go easily above 1 trillion plus 1.5 trillion plus. But just to give you a sense of the revenue loss, if let's say the government had not increased ATF and diesel windfall gain tax, and you had only the duty cut, then the revenue loss is around 1.8 trillion for 12 months. So it can't be higher than that. So at max, let's say if our exports get impaired, it will be around 1.3, around that margin. So not too much of a risk to our 950 billion estimate.
Gaura, good afternoon. This is Hiral here. You're talking about the export side of it. Now, there are reports suggesting in terms of brokerage notes where the government has increased the excise duty by 21%. And this is when it comes to domestically sold ATF, right? Is that something that you've taken into consideration as well? And if not, and if you have to, does anything change?
We have taken into account the windfall tax that they have done for exports as per the notification of that we saw from the gazetted notification. So that, as per our interpretation, was limited on export side, not for the domestic consumer. As per our understanding, there is no hike for the domestic consumption of these ATFs, because that will be counterproductive from the government. Is what they're trying to do is they're trying to protect the OMCs as well as the consumer. So our interpretation is that this windfall gain tax is on the export side.
Stay with us, Gaura. We have Mr. M.K. Surana, former CMD at HPCL as well. Mr. Surana, pleasure to speak to you as well. I know we've been talking about this in terms of the excise duty cut that has come in. Let's break this up into two parts. First up, in terms of the impact when it comes to oil marketing companies, yes, it will help reduce losses on sale of petrol and diesel. And this is if benefits are not passed on to the consumers. And that's where we're sitting on right now. Your back of the envelope calculation, how are you looking at this to benefit, OMCs, and to what extent?
Good afternoon to you and to Gaura. What the excise duty reduction is there, to my understanding, it is not to be passed on to the consumers. And it will reduce the losses which the oil companies are bearing or the under recoveries which the oil companies are having because of increase in the crude prices in the current situation. There is one more angle, that because it is a high volume business and there is a lot of liquidity required on the part of OMCs also. So to reduce the burden of the excise helps in reducing the liquidity. Otherwise, you can't be buying crude at a higher price and selling the product at a lesser price with such a high volume, which may lead to the liquidity problem otherwise. So as far as the exact quantum is concerned, I would not like to guess right now, because it will differ from companies to companies depending on what is their share of marketing and the refinery volumes and how much they are buying from outside. And also at what price they have tied up the crude, because that item is slightly sensitive in the current situation, that who is buying from whom at what price. So I would like to comment on the exact quantum, but definitely it will help in reducing the losses which are under recoveries which they are having.
Right. Just as per your understanding and analysis at this point of time, what we are hearing from our channel checks is that though government has increased the export tax on ATF and diesel, but at this moment refineries are anyways refraining from exporting these products. So this move will technically not benefit the government much, right?
No, basically the purpose of putting the export duty is to ensure that some of the people do not export because the international prices are high at the cost of the domestic consumption, where the prices are a bit curtailed or static.
Right.
And otherwise, what will happen is that the private players will be exporting and making the profit, and all those volume will shift to the public sector oil companies, and their losses will increase. So it is a sort of balancing act which the government has done, wherein there is a discouragement to export, and at the same time there is a reduction in the excise duty on so that the oil marketing companies at least have a lesser burden than what it is supposed to be. At the same time, the consumers are not required to bear the burden of the higher prices, which will have the macroeconomic impact in terms of inflation, etc. So the similar thing has been adopted earlier also, where the government has tried to manage the increase and decrease in the crude prices by varying the taxation without impacting the market price.
Right. Yes, sir. The oil marketing company, in fact, the PSU OMCs are not taking any price hikes to offset the impact. But private players, on the other hand, have already taken a price hike. Naira, for example, has increased, I believe, diesel prices by around 5.3 rupees and petrol prices by 5.3 rupees and diesel prices by 3 rupees per litre. So do you think this will lead to a market share shift towards oil marketing companies, and that could also at this point of time be negative for them, given the fact that they're already incurring losses on sale of every litre of petrol and diesel?
Recoveries will be more than this 5 rupees and 3 rupees currently, and therefore the volume is already shifting to the public sector OMCs, who who have not increased the price. Rather, there would have been the private players would have been discouraging the sale currently, as has been done in the past. So one of the reasons why you see some of the crowd at some of the OMC petrol pumps is because of those volume shifting from private sector to the public sector companies.
Mr. Surana, we're talking about under recoveries. As Soumit mentioned, a very conservative number, but a couple of brokerage notes are of the opinion that they're somewhere in that range of, say, 30, 35. That is the kind of number that we're picking up from a brokerage note. And post all of this, expectation is it could actually come down to, what, 40. How do you read this kind of a print coming in from a brokerage note like a Nomura?
So I would not like to comment on that. I will leave it to the analyst and the people who comment on the stock market to guess on that. But only thing I can say is that it is not as straight as the people understand, because they must be doing the daily crude price and daily product prices. But actually, the time when you buy the crude, process it, comes to the market, there is a time lag. That's number one. Second, the companies follow different strategies to price the crude when they make their contracts. And therefore, rather than a straight way trying to jump to a conclusion, I would probably refrain from commenting on it right now. And especially not so close to the year end.
Okay, stay with us, Mr. Surana. Gaura, let me come to you. You know, we've spoken about the quantum of pressure that it could put on the exchequer. Now, the question is the fiscal deficit pressure that comes in the form of the revenue loss to the government right now, one. And the other side of the story over here is, if they wouldn't have done something like this, they would have to let the OMCs pass on the price hikes that were happening, and in turn leading to higher inflation, which then would trickle down again to the government's borrowing program. If you have to look at both sides, do you think this is a better option that the government has selected, number one? And two, what is that trickling effect that you're expecting to see now?
It's a very good question, actually. I think the government's intentions are quite noble. It's a much bigger cut than we had penciled in. So they are trying their best to fully protect the consumers. So what had happened during the Russia-Ukraine period, where we had almost more than 100 days of crude above $100 per barrel, is that there was a burden sharing model. The government of India cut excise duty by, let's say, around 8 rupees per litre and 6 rupees per litre on petrol and diesel. There was also a 3% increase in retail fuel prices for the consumer. OMCs also absorbed some part of the, let's say, the LPG side of the shock in terms of under recoveries. Now, this is a much larger cut. So I would say the insulation to the consumer is more, but I don't think the government will benefit from the perspective of fiscal, which you mentioned in terms of the borrowing yields. There also the cost will have to be paid. So after penciling in this sort of cut, and our estimate is, let's say, this is only for 6 months. And then there are other costs that the exchequer has. There will be fertilizer subsidy that will go up. During Russia-Ukraine, your fertilizer subsidy bill went up to 1% of GDP from a budgeted of 0.4%. Currently, again, it's 0.4%, which is budgeted. Then you have LPG under recoveries. During Russia-Ukraine, the LPG under recoveries were around 220 billion rupees. This year, it could be much more. We have penciled in, let's say, around 330 billion rupees in terms of under recovery. So that will add to the LPG subsidy bill. Now, this cut, as you earlier mentioned, it does protect the OMCs to an extent, but not fully. If you look at the oil minister's tweet, where he has mentioned that the under recoveries or the losses that OMCs are facing on petrol and diesel, it's somewhere around 25 rupees to 30 rupees per litre. So this only takes some part of the pain away. There is still half of the pain that they are absorbing. Plus, they have that pain on the LPG side. So it can affect the dividend revenue of the government of India that the government gets from oil PSUs. And oil PSUs account for around 33% share of the dividend income. So the hit to the fiscal will be there. Our calculation on a gross basis, just looking at the revenue foregone, extra subsidy expenditure, and we are working with, let's say, a 6 months sort of hit from an excise duty cut. It's still coming around 0.4, 0.5% of GDP. to around 0.7% of GDP in terms of extra cost to the exchequer.
So
it will add to the borrowing cost.
It will add to the cost. Let me just once come in here. Now, if you see the bond yields, on the back of this kind of announcement, we have seen that spike which has come in. Is that telling you that it is weakening of the fiscal discipline is what markets are reading into with the kind of spike that's coming in terms of bond yields as well?
Yes, I think the markets are the best barometer of risk assessment. So the fact that the 10-year yield zoned to 690, it shows that the market is also sensing that there is fiscal slippage risks. And this is not a minor crude oil shock. Many have called this a combination sort of shock where you have COVID-like features, where you have a supply side problem, which can be not just in energy products, but also in chemicals like sulfur, fertilizer, because we get 33% of fertilizer from GCC countries. So it has a combination of an oil shock and a supply side disruption. So in a way, it is much more negative than, let's say, the Russia-Ukraine crisis was. So the market is very accurately pricing the fiscal slippage risks. So even Russia-Ukraine, which was purely an oil shock, even there you saw the fiscal deficit, it actually was higher than what was the budget estimate. So the movements today have priced in this slippage risks.
Right. Surana sir, just wanted to get in one comment from you. Yes, government has done a very good move when it comes to reduction in excise duty, but this has also led to some fear or some doubt in the market when it comes to oil exploration companies, like for ONGC. Obviously, the fact is that post the Exploration Act that was passed, the government cannot come in and impose any windfall tax. But what is your understanding here? If you could just give your understanding to the viewers to our channel on this as well.
Just before coming to that, I just wanted to add one point to the earlier point, that compared to the Russia-Ukraine war in 22, this time the exchange rate is much higher than that time. And every rupee exchange rate change currently will make a difference of 55 paisa or so on the petrol or diesel prices. So that also need to be factored in. So coming back to your question on the upstream companies, see, the situation is unusual. So while the new oil exploration laws does provide some sort of protections to ensure that the investors remain attracted to the Indian exploration business, and with a lesser risk, but at the same time we need to see how it goes forward, because the situation is a developing situation and it is an unusual situation. So it depends on how the prices of the crude goes up and how long this goes, and what is the exchange rate trajectory it follows. But right now, currently the understanding is there that probably the upstream companies may not be required to pay the windfall tax, but the government may have different ways to make the upstream company participate in this undertaking.
Okay, I think all of these are just questions which only the government can answer in the end. But thank you, Mr. Surana. Thank you, Gaura, so much for joining us on this special discussion. Gives a lot of clarity to the viewers as well in terms of what could be expected and the kind of impact that we could see from here on. But a welcome move, at least, for the OMCs by the government so far. Going ahead, what will the impact be is what we need to wait and watch and see till the time the West Asia crisis continue. But a thank you from Somit, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
हाथ, ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
This market is so fragmented on both sides. It was extremely underutilized. We cater to SMEs. These are 80% of this market is dominated by SMEs. He would call a guy that भैया गाड़ी लगा दो, and he would say that कि भैया मैं आ रहा हूँ 15 मिनट में. He would not come till 60 minutes.
IIT Kharagpur, bright future, can get a good job, got a couple of great jobs, and then decided that I want to start my own business.
In JP Morgan, we were tracking US companies. We were inspired by Uber, wanted to do something of our own. We also felt compelled, coming from a Marwadi family. It was also this that कि अभी नहीं करूँगा तो बाद में घर वाले शादी कर देंगे.
You started also with a fairly small amount, self-funded. What were those initial pitches like?
Initially, raising fund was also difficult for first few rounds.
Really? You got funded in 6 months?
But we didn't got funded after that. One of the fundraisers, Pranav, had met 100 investors and still not got one term sheet.
What happens with a business when it has also a significant retail customer focus is then you also get a lot of feedback.
I usually start with my day where one or few of the emails would just say that you have ruined my life. I want to shift an house, I couldn't shift it because of you. This is a wedding dress which was not delivered.
Tonight is about the people who build the places where we spend most of our lives.
The NDTV Excellence Awards recognize organizations and leaders who are setting benchmarks in people-centric workplaces. The winner is TVS Motors Company Limited. The award goes to Zydus Life Sciences Limited. The winner is Make My Trip. Mr. Vivek Pathak, Planet Cast Media Services Limited.
The Lifetime Achievement Award.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं. बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है. इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं. कैप्री लोन्स फर्ज निभाते हैं.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu. Here we come.
India, a land of story and resilience. 1.4 billion hearts share this home, and the responsibility to protect it rests with all of us. As India moves towards net zero, every step matters. Walk with us as we discover the people and ideas shaping a more sustainable India. India's Sustainability Mission, an initiative by NDTV.
The fairways of Qutub Golf Course set the stage as the NDTV DP World PGTI returns for its 5th edition, from surgical iron play to composed putting on greens that run true. India's top pros join the capital's corporate leaders for a celebration of skill, sportsmanship and connection. Watch at these times.
Two worlds meet on the greens. Champions of the fairway, leaders of the boardroom. The battle for brilliance, the pursuit of precision. As Bengaluru hosts the season's final Pro-Am, NDTV DP World PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 28th March, Clover Greens, Bengaluru.
Technology, as you know, is rewriting jobs, expectations, it's rewriting culture, it's perhaps rewriting leadership itself.
Today's what is called is triple T.
Right.
Technology, talent through transformation.
I think it's an adoption of the technology which is all about mindset.
There is a $200 billion industry which has already come up in AI, just in HR, and it's going to hit us like a tsunami.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy.
All right, we're talking about Biocon when there is a change of guard, the top brass management changes. So Shrihas Tambe is going to be the new CEO and MD of Biocon, remember, from 1st of April. And also remember that he'll be the first MD and CEO of the integrated Biocon. So that's going to be a big one. We are joined by Shrihas Tambe now. Shrihas, many congratulations. And of course, this will be a Herculean task because this is a very important milestone in the company's journey on an integrated basis. What will be your focus areas in terms of integration and getting both the values of Biocon and Biocon Biologics?
First off, Michelle, thank you so much for having me on your show, and thank you for the kind words. It is, in that sense, the same companies. I begin my 30th year at the Biocon Group this year, so I really don't see this as two different companies that are coming together. The DNA is pretty much the same. We share the same first name as well. We do have different businesses, and as your business strategy evolves, which I've seen happen at the company so many times over that I've been here now. One of the things that is important is that you align the talent pool that you have to reflect that change. And I think we've done that remarkably well when we did that integration of the acquired business from Beatrice. And I believe we're in a very good place as we've now completed the integration of the biosimilars, Biocon Biologics business with the generics business that we had. So we're looking forward to building a fully integrated global medicines company at Biocon now, which will now compete on science, scale, and access. So very exciting times ahead of us, Nishin.
So you have worked, Shrihas, for Biocon for the last 30 years in different roles, but you have been the MD and CEO of Biocon Biologics. So does that part of the overall integrated unit of Biocon now take precedence over the other businesses, and therefore your expertise is going to be valuable?
Well, I think more than precedence, it's important to see